Welcome back to our weekly market wrap-up. Indian equity markets ended mixed for the week, snapping a six-session winning streak as cautious global cues and profit booking in heavyweights capped momentum despite upbeat domestic data. So stay tuned, and by the end of this video, we'll unpack the key drivers behind these movements and what lies ahead. This week, the Sensex rose 709 points, plus 0.9%, to close at 81,307, while the Nifty gained 239 points, plus 1.0%, to end at 24,870. The rally during the first half was supported by upbeat PMI data, GST reform optimism, and steady core sector growth. However, Friday's sharp sell-off in financials and IT dragged benchmarks off highs. The broader markets outperformed as the BSE Mid-Cap Index gained 2.0% to 45,890, and the Small Cap Index advanced 2.3% to 53,002, reflecting strong participation in mid and small cap stocks. Markets kicked off the week on a firm note, with the Nifty briefly crossing the 25,000 mark by midweek. However, profit booking set in towards the end of the week, leaving benchmarks to close off highs. So stay tuned as we break down the key factors behind this turnaround and explore what could drive the markets in the coming week. Let's take a look at this week's key economic updates. India's business activity strengthened further in August, with the HSBC Flash Composite PMI Output Index rising to 65.2, up from 61.1 in July, marking one of the fastest expansions in over a year. Services PMI surged to 65.6 from 60.5, while manufacturing PMI improved to 59.8 from 59.1, highlighting robust domestic demand and resilient export orders. Globally, on the industrial front, core sector output grew 2% year-on-year in July, supported by higher production in steel, cement, fertilizers, and electricity. The June figure was revised to 2.2%, underscoring steady momentum in infrastructure and construction activity at the start of FY26. Among this week's top gainers, Godavari Power surged 17.7% on high volumes, riding strong momentum in the metals and mining space with robust investor participation. Lemon Tree Hotels jumped 16.7%, hitting a 10-year high as sustained demand in the hospitality sector and optimism around occupancy and ARR growth lifted sentiment. Sundaram Finance advanced 16.2%, extending its uptrend on strong credit growth and a stable asset quality outlook in financials. On the downside, the top losers, BSE slipped 6.0% on profit-taking after a strong rally, with investors trimming exposure despite healthy fundamentals. Tata Communications declined 5.3% on weak sentiment in the telecom and IT services space, even as long-term growth drivers remain intact. Glenmark Pharma fell 5.3% amid sectoral pressure and selective selling in pharma, limiting near-term upside. In the unlisted space this week, the new online gaming bill 2025 raised concerns for the Chennai Super Kings, as the ban on gaming sponsorships is expected to weigh on IPL franchise revenues. Nayara Energy continued to face pressure after European Union sanctions, forcing the refiner to explore alternative supply chains and financing channels to sustain operations. Bengaluru-based Captain Fresh filed plans to raise rupees 1,700 crore through an IPO, with proceeds earmarked for expansion and technology investments. Unlisted companies drawing high interest this week include Chennai Super Kings, Nayara Energy, Captain Fresh, Hero FinCorp, MSEI, NSE, Apollo Green Energy, and PharmEasy. That wraps up this week's market highlights. Here's what to watch in the week ahead. Markets may open cautiously as domestic cues remain steady and selective. Sectoral resilience supports sentiment. A light economic calendar at home may limit data-driven volatility, though global developments could take the lead domestically. The key events will be the release of India's July Index of Industrial Production and Q1 FY26 GDP data on August 28. Industrial output had slowed to 1.5% year-on-year in June, the weakest since August 2024, while the economy grew 7.4% year-on-year last quarter, marking the sharpest pace of FY25 globally. Focus will be on China's loan prime rate decision on August 20th, with the 1-year and 5-year rates currently at 3.0% and 3.5%. In the United States, markets will track the Chicago Fed Index and new home sales on August 25th, durable goods orders on August 26th, API crude inventories on August 27th, the second estimate of Q2 GDP on August 28th, and core PCE inflation on August 29th, which is the Fed's preferred gauge. That's all for today. Stay connected with Ticona Capital for more insights and wealth-building opportunities from the themes of the decade. Explore more on ticonacapital.smallcase.com to know more. Don't forget to like, comment and share. See you next week.